So, welcome to today's podcast. I'm Pat Soldano, president of Family Enterprise USA and Policy and Taxation Group. If you don't know who we are, we advocate for family owned businesses across the United States, all sizes of business and all industries. We work on tax and economic policy that affect the families of those family businesses. Today, we are delighted to have with us George Gleason, who is the chairman and chief executive officer of Bank OZK for 46 years. Under his leadership, the bank has been profitable every year and has grown more than 1,000-fold since he acquired it in 1979. That's pretty amazing. If you don't know Bank OZK, well, it's a very interesting story of growth. Bank OZK, then known as Bank of the Ozark, dates back to 1903 when it started as a small community bank in Jasper, Arkansas. But in 1979, it was purchased by a then 25-year-old attorney, George Gleason. At the time, the bank had just 2 branches, 28 employees, and $28 million in assets. Today, Bank OZK has grown to over $41 billion in assets with more than 3,200 employees, 260 offices in 9 states. We're very, very pleased to have with us today George Gleason.
Thank you, Pat. It's great to be with you. And before I say anything else, I just want to say thank you to the work that your organizations, Policy and Taxation Group and Family Enterprise USA, do for our family and many, many other families, and in support of the U.S. free enterprise system and our economy that is so important. So thank you for the work you guys are doing.
Well, that is very much appreciated. And we thank you for your sponsorship of the work that we do in DC. Without organizations like yours, we couldn't do this work. So, George, let's get into it now. I talked a little bit about the history of the bank, which is pretty fascinating, but I'd like you to give us more details, talk about the history, the family business story, and the journey you've taken with Bank OZK.
Well, my family business story is really 2 parts. One was as a very young person, and I became involved in business at a very early age. I was the oldest son of 2 very entrepreneurial Depression era parents. They were very hardworking, very thrifty, and had a bunch of small mom and pop businesses, a grocery store and a hardware and dry goods store and a livestock manufacturing feed mill, a cattle operation, a poultry operation, a row crop operation, rental property, both residential and commercial. And I was involved in all of those enterprises as a small child and worked in them and did the dirtiest, nastiest, most dangerous things, but also got to go with my dad at night. And by the time I was 12, I was doing book work. By the time I was 14, I was doing his tax returns. When I was 16, I laid out my family's estate plan for my parents. When I was 18, I sued my parents to become an emancipated minor with their approval, of course, so that I could actually run some of their businesses as a adult with a legal capacity to contract. So I had a very unusual laboratory experiment learning business from my parents at a very early age. What I drew from that was a lot of positive experiences, a lot of knowledge. And, it's a great example for a lot of your families who are trying to figure out how to, develop that next generation of leaders, is immerse them, as my parents did, in your various businesses and let them learn and let them make mistakes. And it's a great way to train that next generation of family members. But one of the lessons I learned is that my parents had no vision to scale any of those businesses. They were very successful and did a great job running businesses, but they had no vision to scale it. So as a very young man, after working for a little while as an attorney at age 25, I bought controlling interest, as you said, in what was then Bank of Ozark, a $28 million bank. And my vision for that was to scale it. Now, I didn't realize quite how far we would scale it. It was somewhere around the 10,500th largest bank in the U.S. at that time. We're now, if you include U.S. subsidiaries of foreign banks, we're the 57th largest bank in the country and the 40th most profitable bank in the United States. So moving from 10,500, there aren't even that many banks now, to mean 57th in the country is a pretty significant move. And as you said, we've actually increased the size of the bank about 1,500 fold over that period of time. So we've had great success. As you say, we've been profitable every year and have built a great company based on a great team.
That is a fascinating story. Thank you so much for sharing that. As you know, we at Family Enterprise USA, as I mentioned in the beginning, work on policies that affect the economics of families and family businesses and their employees. And what we're all facing right now is this lack of certainty and lack of predictability. While we do have this tax bill that was passed and it's helped a lot of family businesses, we still have a lot of uncertainty out there, especially with the shutdown and with tariffs and other things that family businesses face every day. So how do you see that in your world, George? How are you dealing with uncertainty and a lack of predictability?
Well, it is a very uncertain time, and in my 46 plus years of doing this job as chairman CEO of Bank OZK, it's probably the most uncertain time with the largest standard deviation in potential outcomes and the largest tail risk both directions for potential outcomes that I have ever experienced. We as a company embrace turbulence and uncertainty. Our experience over my 46-year career is that the times that you have the greatest opportunities, the times that you can achieve the most significant advances in your company or your business are often in times of economic turbulence and uncertainty. Our view on that has been borne out in a number of downturns. When you do something, as I've done for 46 years, you go through a lot of cycles. And we've always produced the best results as a result of adverse economic cycles. Now, our approach on that is you really need three ingredients all the time to be ready to take advantage of those cycles. One is you need great leadership management with a vision for where risks are and where opportunities are. You know, in every turbulent economic time, there are a lot of challenges that bring a lot of risk. But for every challenge and every risk, there is a corresponding opportunity on the other side of the equation if you can identify it. So having great management resources and vision and an awareness that, yes, I've got to address the challenges, but I can also identify and capitalize on opportunities is step number one. Then you need to be well capitalized with the financial strength undergirding your enterprise that, you know, you can take advantage of those opportunities and you can withstand the adverse impacts of challenges. And number three, you need enough liquidity that you can really go out and deploy the resources you need to both deal with the defensive matters you need to deal with and also the opportunity to capitalize on that environment. So that's the way we've approached it. And I think most successful family offices, family enterprises do the same thing. They operate with a strong management, a lot of capital, a lot of liquidity, and they're ready for adversity. They plan for it, they expect it, and they also know that that will create some great opportunities for them.
Well, I agree with you. Family businesses can be more flexible and more agile and more resilient. I got to say that the approach that you've taken certainly has proven successful since you've had profits all 46 years, which is an amazing statistic. So, congratulations on that.
Thank you.
Let's move on to a very interesting part of your business, and that is your real estate specialties group, or what you also refer to as RESG for short. It's one of the top lenders for high profile commercial real estate projects throughout the nation. Since many of your clients are in the commercial real estate, and that sector has faced some very, very interesting challenges post COVID, how do you help your clients navigate that dynamic economic environment?
Well, that's a great question. And, I have a lot of history in real estate. I did my first real estate development deal. I think I was 19 years old when I did it. So when I got in the banking business, it was a natural fit to gravitate toward real estate activity. So we have always been engaged in real estate finance. Now, when we were starting out 46 years ago as a $28 million bank, you couldn't make a very significant real estate loan. Today, we make loans on a lot of the largest and most complex real estate projects all over the United States. And our focus is on doing very high quality projects. We're in every major market in the U.S., most of the secondary markets, and a fair number of the tertiary markets across the United States. So, as probably the most active construction and development lender among banks in the United States, we see probably 80% or more of the transactions done in the U.S. that have a loan size of 40 or $50 million or more. So we do a lot of really large, very complex projects, and have developed an unusual level of expertise for a bank in that regard. So what I would tell you, there are really three things that we employ to make that business very safe. Number one, we're a very low leverage lender. Our average loan to project cost over the entire portfolio is about 50%. Our average loan to appraised value today, based on most recent appraisals, even in this kind of challenging environment, is 46% loan to appraised value. So our sponsors have massive amounts of equity in those transactions, and that ensures that the sponsor, is going to protect that senior loan that we have vigorously, and has a lot of stake in the game there to protect and defend. Secondly, we focus, on, as I say, large projects, and that typically means you're dealing with really high quality sponsorship, people who have a lot of experience in commercial real estate, a lot of expertise. They're not going to get rattled when a cycle comes because they've been through a lot of cycles before. And they have the capital and liquidity to protect those large investments that they've made in those projects, and to carry those projects through an extended development cycle if economic conditions change and they have to turn a 3-year or 4-year development cycle into a 5 or 6 or a 7-year development cycle. And then the final thing is focusing on really high quality assets. Your clients, your members will quickly apprehend the fact that high quality assets always find a bid, whether it's commercial real estate or art or whatever. The high quality assets always have a bidder wanting to acquire them, or if it's a lease property, wanting to lease it. So because we do mostly construction loans on ground up new construction, our assets are modern, They're the type of assets that sponsors are looking to develop, that tenants are looking to lease, or that buyers are looking to buy because they have a future. People want to be in them. They're high quality assets. So low leverage, great sponsorship, high quality assets are really the three keys to how we've been able to be in a business that most people consider very cyclical, very risky. We're in it every day, every year, every part of the cycle. And we've had an exceptional track record over the 23 years that we've had that real estate specialties group in operation. We've, I think, averaged about a 13/100% loss ratio per annum. So very, very low loss ratios from it because of the quality of sponsorship, the quality of assets, and our very low leverage position.
Well, that's a pretty impressive statistic. Very low loss ratio, as you just pointed out. I think it's very helpful that our members and our listeners to this podcast know that you have this real estate specialty group as an option for them in their real estate dealings. So that's a great resource. So we're looking down the road here at two factors that are affecting family businesses, and these are the big factors of inflation and interest rates. What's your take on these two factors and how they're affecting not only your businesses, your clients, but maybe the labor market and your employees for growth?
Yeah, well, certainly those are two very important factors, and there's a considerable amount of uncertainty going back to your early question around both of those. The Fed seems very much on a course to cut rates at least one additional and maybe two additional times this year and going into 2026. So I think we are going to see a Fed bias toward cutting. Of course, at the time we're recording this, the government is shut down and we have very limited supplies of current economic data for the Fed to use in making their decisions, which adds yet another level of uncertainty to this. My biggest concern is that the Fed cuts too much in here and too quickly, and we're still running with an inflation rate, of slightly over 3%. And if you strip out and look at the core and the super core, those numbers are even higher. And that's alarming. That's a long way from the Fed's target of 2%. I'm not sure 2% is really the number that the Fed should be targeting, but that is their stated target and has been. They're a long way from it. So I'm afraid that the biggest risk in here is the Fed cuts a couple of times too much, and that reignites higher rates of inflation into next year, and then they find themselves having to increase rates sharply to try to curtail that inflation surge.
Well, I think that's very helpful information for family businesses and a good perspective on what could happen with interest rates based on where inflation is or where inflation could be. So appreciate that input. Let's now talk about cyber threats. You and I had a brief conversation before this podcast about how important cybersecurity is to our family businesses and to us as a nation, quite frankly. And it seems to be a growing issue for family businesses. How is Bank OZK dealing with the cybersecurity risk?
Well, we share your view that it is a very significant risk and a rapidly growing risk. And the significant progress being made in artificial intelligence is just enhancing and amplifying cyber and other types of fraud risk significantly. So this is a growing problem, and it's a growing problem for the banking industry. It's a growing problem for your family enterprises that are members of your organization. It's a real issue, and the fact that so many rogue foreign governments have uh, state-sponsored cyber uh, criminal activity is just amplifies this whole risk profile. So we take this very seriously, and we've devoted a massive amount of resources to this, and I think more so than a lot of banks. And that's because I think we are more sensitive to this risk than is generally the case. I'll give you a statistic. For example, the average bank on their phishing campaigns that they conduct among their employees has a 15 to 20% click rate on that. We've done so much training and so emphasized this that even our well-designed phishing campaigns that we throw out at our employees, they have a below 2% click rate on that. And that really is a result of a realization that cyber risk is not a technology risk, it's a business risk, and it's got to be managed and addressed and trained for like any other business risk. And I would encourage all of our listeners today who run family enterprises to make that same decision that cyber risk is not a technology thing, it's a business risk. And just like anything else, it's a business risk. You have to think about it. You have to train for it. You have to prepare for it and address it proactively, or it will manifest itself in some sort of loss or problem for your company. So I think it's a very important issue. I would even offer up our Chief Information Security Officer to do a future webinar with you, a podcast, whatever, on this subject, because I think it would be incredibly useful to your members to hear a real expert on that subject address it. But very important, and there are lots of ways that a business can protect themselves from cyber or other fraud losses.
Well, I absolutely agree with you. It is a business risk. It's a huge business risk, and it seems like it's growing more every day and getting more sophisticated and complicated. And I absolutely would love to take you up on your offer to have your chief security officer do a webcast for our members. We'd love to have that. We haven't had anyone do that yet. So I know that would be very, very valuable to all of our members. So thank you for that offer. I'll follow up with your team on that. So my final question to you, George, is let's talk, and this is a pretty big question, I think. Let's talk about how Bank OZK connects with family business owners, family offices, and what some people call high net worth individuals. We're calling successful individuals or successful families because that's the term that voters like. But how do you do that? How do you work with these family offices, family businesses, and high net worth individuals?
Gosh, we do that in so many ways. But let me start out, since you've talked about our real estate group. Obviously, if you're a family office or a family that is in the real estate development business, we've got a leading platform for that in our real estate specialties group. We're a national leader among banks in that business. We're number one in that business in the construction and development side of it. So we bring a great deal of expertise and capabilities to families who are actively engaged in that type of business. Families who are engaged in other businesses, we interact with routinely through our corporate and institutional banking group. And we have a lot of companies, family companies that we do business with there, providing asset backed lending facilities, equipment finance facilities, enterprise value finance facilities for acquisitions of business or development of businesses, fund finance facilities, and all sorts of corporate finance. And that includes our natural resources group that does energy lending, oil and gas lending, and so forth. So that group deals with our customers on all the same sorts of complex, larger, more sophisticated lending structures that are not real estate related. And then, of course, our trust and wealth division provides full level of fiduciary services, estate planning, and trust management for clients. They also work with our private banking folks to handle private credit, private equity, venture capital, and other sorts of investments, as well as, your more traditional equity and debt type investments. So we really interact with a lot of different family offices, a lot of different family enterprises to meet their needs at different points of our business. Our branch network is distinctively southeastern, Arkansas, Texas, Georgia, Florida, North Carolina, and Tennessee. We have branches in those 6 states, about 250 branches today in those 6 states. But our business is truly nationwide. We're all over the United States. And as I said, in every major city, doing business in most secondary markets and a lot of tertiary markets across the country.
Well, George, it has absolutely been a pleasure and an honor to have you on this podcast today. I really appreciate your time. I know you're a very, very busy gentleman, and you took time to prepare for this as well. And so once again, we just really appreciate you being on this podcast today.
All right. Well, thank you, Pat. It's been a pleasure to be with you. And once again, thank you for the fine work you guys are doing. We really appreciate it. Our country needs that sort of impetus among our legislators and governing forces to really support our free enterprise system. And we appreciate you. Thank you.
Thank you for that. I also want to thank our listeners. We hoped you liked today's show. And if you did, please subscribe to our podcast, where each episode discusses the critical issues affecting family businesses, family offices, and successful families around the country. Thank you all very much for listening.